All right, stocks finished the week on a good note. The question, of course, as it always is when you're in this bear market, is how good of a note was that? And a lot of chatter over the weekend about a good low point forming here. In fact, Barron's wrote an article over the weekend about a good time to buy. So we talk about from a technical perspective. How do we look? I mean, do we look any different than any of the other times we bounced? Because this is hardly the first time we've had this kind of bounce. We've had just within the last couple of weeks, we've had bounces like this. So, what makes this one different? So we're going to take a look at that. We're going to take a look at major asset classes and how they're moving here going into the new week. We'll take a look at which sectors performed well this week and what does that tell us in terms of how bullish or bearish we are. And then finally, we'll take a look at a trade idea of a stock that really rallied, not just on Friday, but the whole week. You're going to see a lot of stocks just like this as we continue a short-term rally into resistance. This stock is there at that resistance. So how do we trade it? As an example of what you'll see a lot more of over the next week or two. So let's go ahead and get started. Today is Friday, May the 13th, 2022. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. So you can see the nice little rally we did. We closed above the high of the low day, closed above yesterday's high point. But you notice, again, we got to the 23% retracement level. We did not get above it. So remember, we don't start the retracement. In this case, would be an intermediate retracement to the upside. The pullback would be to the upside right now until you break that level. More than likely, you're probably going to break it next week. I would venture to guess the near-term line as it heads into bullish territory here will probably be up here for a while. So that would be an expectation, but it hasn't done it yet, right? And when it does, you see where the layer of resistance is at that 38% retracement level, which of this intermediate decline, the 38% level of this market sentiment decline, and the 23% level of this big post-COVID rally that we finally broke as support. You would ride up into this area. So you're looking at about 42.25 down to 41.50. There's going to be some significant resistance. Your 30-day moving average, for that matter, will probably be, by the time you get there, unless it happens tomorrow, but your 30-day moving average is going to probably be down in that area too. So that's going to act as a resistance level. So really important to see how we do as a near-term line does. The near-term line is not going to stay down forever. It never does, never has, never will. So it's going to bounce. That's why it's kind of shocking that people just get so crazy. I mean, like back here, let's see, was it right there? We gapped up higher on the 28th than we did today on Friday. We gapped up higher, and we finished with a higher close on that day than we did here. But the very next day we dropped, and that was not a Monday. That was a Thursday, and we dropped going into Friday. So, and again we had a good rally there, and then we dropped. So let's see what ends up happening by the time, so especially as we get towards, these moving averages here. Once we get into that area, then we can start to consider. If we break through there, we're, being a little bit more bullish. Otherwise, when you're, 8-9% below the 30-day moving average, as we were, you're going to make a move back towards it. That's just how it works. That's how it's always worked, right? When you get far below moving averages, you ultimately will make your way back up towards it. Let's take a look at the NASDAQ. You can see the same thing, very similar pattern. You can see that it also did not get above its 23% retracement level, didn't even get close. And you can see also too that, so you see didn't get us close to the S&P, and then there's your resistance level again, 38. In this case, it would be the 38% retracement, not the 23, but the 38% retracement of the post-COVID rally. And then you've got your market sentiment rally, the 23% retracement level. Be sitting there. And then of course you look at the Russell 2000 and you can see something very similar there too. There's going to be lines up here that we can move towards that will act as resistance levels, and that's it, right? That's can see the 23% retracement, but then there's those lines, right? 3 of them right on top of each other, the 23% of the market sentiment, the 38% of the post-COVID rally, the 38% of this intermediate drop, all sitting right there. So about 1880 plus or minus whatever. So move up to those areas, and the 30-day moving average too. Move up to those areas, and now we've got something going on. When you look at the 5-year chart for the SPX, again, to have the near-term line just have 1 week below the 10th percentile is pretty rare. We had 3 weeks with the intermediate line below the 10th percentile, the near-term line, below the 10th percentile on the weekly chart. So very significantly bearish. Big, long lower shadow on the weekly chart. Really, really big, long lower shadow. So, there's going to be some bullishness there. We've seen long lower shadows before, even on this current decline. We've seen long lower shadows before, and we filled in the range of that shadow. So the low of the shadow is going to act as support. So it doesn't mean that we can't trade in the range, so keep that in mind. You also got that long upper shadow right before. The short term, the intermediate line's oversold. This is the first time that the intermediate line's been below 20. See, the intermediate line didn't get, the intermediate line on the weekly chart didn't get below 20 on the COVID drop. So that kind of puts in the context of this decline versus the COVID drop. That was so far so fast that it was able to bounce right back up just as quickly and kept the intermediate line, the low point at 21. Now we're at below the 18th percentile. We did get this, in the fourth quarter 2018, we did drop down into this area. It came close to a cluster here this week. The short-term lines is barely above the 20th percentile. Let's take a look at the other weekly chart, and you can see it's a pretty bearish candle. It's a pretty decently sized bearish candle, one of the bigger sizes of a bearish candle outside the COVID decline that we've seen, right? You can see there's the COVID decline. 2011, you had some pretty decently sized candles. And then, of course, at the worst of the bear market, you get this big. So this is a pretty decently sized candle, and we did close below last week's low. I would venture to guess, I don't know if this will flip around to the upside, and there's a pretty good chance that we will. The hull's been so bearish for so long, a 20-day hull, for you to be so bearish for longer than 20 days, once you get to 20 days, you're pretty extended, and it just has not turned up. And you finally did get a bullish Hakinyashi candle on Friday. We're nowhere near parabolic SAR turning around, so keep that in mind. This is where we are relative to the 200-day moving average is pretty low. The average of that line, this is the 9-day average of that line. This is also pretty low, and you can see we're starting to cross up. So we're not quite turning things around, but there's going to be a green move. There's going to be a green hull here. You expect it would be. And considering, again, we've talked about this idea behind the McClellan oscillator, it's kind of hard to have a breadth thrust if you don't have, which in this case would be a move above positive 100 if you haven't had a move below negative 100 first. So you can see that fourth quarter 2018, we kind of hit when things finally hit the fan, we moved below minus 100, and boom, we moved up above positive 100 on the bounce, and that was a good sign that we were going to rally. Same thing with the COVID. We haven't had that here. So we haven't had the drop below minus 100 first, much less now expecting a move above positive 100, especially with the summation index at the lowest level that we've seen, again, since COVID and at the worst of the decline in the fourth quarter 2018. Let's look at the 3 green arrow charts. So you still got light pink shading here. Like, we don't have a green arrow yet on either of these indicators. The stochastics was so oversold. It's turned up, but it's so oversold. So you still got lots of light pink shading. It's not like we haven't, it's not like it's straight light pink. There's been plenty of non-shaded areas in here. So we're probably going to get one of those on Monday or Tuesday. The question is whether we'll get green shading. That would be 3 green arrows. And then the question is whether we'll get green shading for more than just a day or two, because that's when things turn bullish, is when it stays green for a few days. So right now we're not even not pink. So we still got some time. You can see the other thing too is, we're still below the 8-day moving average. We're not even, much less getting above the 17. And you can see, where that 23% retracement is. Remember how there was all those resistance levels at the 23%? Well, guess what other resistance is up there? the bottom of the value area, which is going to be a tremendous volume resistance for the price. So, there's a good chance we move up towards 418, but the odds of breaking through there is not zero, because nothing's ever zero 100% in technical analysis, but the odds of breaking through 418 are going to be very, very slim. But, the odds of moving up towards it is very high, considering we move down so far so fast because there's no volume here. Well, guess what? There's no volume now above us either, because we moved up so fast. So it's going to be really easy for us to be volatile in this area, this low volume area, and start to fill in some volume in that area there. Let's take a look at some of the other oscillators. The DMI, you can see, is still bearish, even though it's turned down and the positives turned up. They're still at bearish levels. You still have a rising ADX. When you look at the RSI and the CCI, I mean, they're turning up too, but they're not in bullish levels here. And then you look at the Ichimoku cloud, well below the cloud, well below both the green and the blue lines. And you still have a very mature bearish trend, so nothing's changed from that perspective. From a Bollinger Band perspective, you're now not in the lower quartile, and you're not in between the Keltner and the, oops, maybe this one, sorry. This one right here. So you're not in between the Keltner and the Bollinger Band anymore. You can see your momentum. You got such a wide gap between the Bollinger Bands and the Keltner channels here. So you're not, but you're also not in you're in the middle, but you're at the very bottom of the middle. We're not in the upper half of this Bollinger Band with yet. So no significant areas there yet that we need to be worried about. Let's take a look at the intraday chart. We did gap up and we ran away from the gap. So there's a chance that this can be a runaway gap. So we need to kind of keep an eye on whether or not we fill this in at all over the course of the next few days. So we did get a higher high, higher low. We closed above yesterday's high. We did not close above last week's low point though. So, again, we were so far below last week's low point that you had room to move up and still be below it. And that's what ended up happening. You can see from a volume standpoint, the volume tapered off. So we rallied, but we rallied with less volume. So 104 million. The range was below average, but you have to include the gap. So we closed at 392. The low was at 395. So you have to add in another 3 points of gap there. So you're really about at the average for the range, and about at the average. So again, you had an average range and average volume. Now they're high averages, but still, you're just average. We've been above average on the decline, so to be only at average on the bounce, not very good. And you can see the volatility index didn't drop a whole lot. I mean, it's in neutral territory. It's below the 95th percentile. It's below 30. This is, to be this far below these moving averages with the VIX this low and with the VIX 3M this high is pretty rare. But it goes to show that the market still got concerns over long term, like an extended downside move, not just a big, even not just a COVID style drop where it's hard and fast and then boom, we bounce right back up just as fast. No, that's the anomaly. I know a lot of people look at that as recency bias, and for a lot of people that's the first and really only decline they've ever experienced in the markets because of there's so many net inflows since COVID, that so many new traders that they haven't experienced anything. They know about the COVID decline, and that's it. This is more normal, right? This is more of a normal decline that is a bit more gradual instead of down and V-bottom right back up and so dramatic, right? This isn't so dramatic. We still got, when you look at the how far down we can still go before we hit that 200-week moving average, and you're still looking at about 350 in that area. In the verse, 400. So we still got 50 points, more than 10% drop down to that area with very little volume down there to stop us. Now, can we go back up in the very short term? Sure. But over the course of the market's not worried about a fall off the cliff move. The market's worried about just gradually moving towards this area of the next few expiration cycles before you hit some support, and then we'll figure out what kind of correction bounce we get and whether we fail on that bounce or not. So I still think that there's plenty of downside. I think there's going to be some short-term upside. towards those resistance levels I showed you earlier in the video, and then that's it. Right, then we'll be back on the trend. What do you think? Do you agree with that? Do you disagree? Let me know in the comment section below, especially if you disagree. You know, what charts or indicators tell you why you're either a lot more bullish than I am, or why you're a lot more bearish than I am. All right, before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, hit that thumbs up icon. That tells us two things. One, you liked the video today. And two, you want us to do another video again on Monday. It's a quick way to give us feedback and let us know that you like it. Of course, if you don't have to click on anything. You don't even have to watch. Also, while you're down there, comment. What did you get out of the videos today? What stood out to you? What questions or comments you have? Post those in the comment section. Join our website at marketscholars.com. There's a link popping out up there in the top right corner of your screen. Click on that link to subscribe to our site for free. Follow me on Twitter for more content between the videos from day to day. There's my handle at DavidSettle42. And join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, come over here and click on some of these things over here on the right. Click on this icon that takes you to our Market Outlook live page. Monday, Wednesday, and Fridays at 3:30 Eastern Time, I do a live video here. It only lasts about 10 to 15 minutes. I look at all trades we've looked at in prior Market Outlook videos to see whether we should stay in them or get out of them. We also put on today's trade, that day's trade before the market closes. You can also see all the archives. Come up here, you can click on, you can also get to this page by clicking on Live Trade Review in the main menu. Come down here, you can see our upcoming classes that we have. Click on View More, that takes you to our calendar with all of our upcoming classes here for the rest of the month, as well as 4 years worth of recordings there. Come down here, click on this heart, it takes you to this tab. Click that like button. Same thing with this Facebook. Click on the thumbs up icon, it takes you to this tab. Again, click on that like button there. The more you do that, it helps get our content out to more of our followers. That's why we always ask for it, based on how these algorithms work. It also benefits you for the same reason, because Twitter and Facebook promote content in your timelines from the accounts that you engage with. So we try to make it really easy for you to engage with us right here. All right, now let's take a look at what's driving the price action here Friday. And you can see from this chart, pretty much the main driver is the fact that, you know, what was really oversold over the past 3 months to the tune of like double digits, high teens, returned over a 3-month period. These are 3-month period returns. These are not year returns. They're just over the last 3 months, not even year-to-date returns. And then the ones at the bottom jumped up. Now, granted, the ones at the top kept going up too. Commodities are still bullish, but everything else, you know, gold was down, the dollar was down. Real estate is up because it's been oversold, you know, outpacing high-yield bonds. And then long-term bonds was one that went down, and it stayed down. So you don't expect that will be too much of a long-term perspective. Long-term bonds has really been, you know, that's been the big, you know, they had such a great week until the very end. A little bit of a pullback right there. When you look at the weekly chart, I mean, we came really close. You're getting long upper shadow. You ended up with, you didn't get the engulfing pattern, but you did end up with a piercing line pattern where you gap down and you close about halfway up the candle size. You can see the stochastic is extremely oversold. Same thing with the average. The MACD, you know, is about as low as that MACD is as low as it's ever been for TLT, like in the history of TLT. So it's way down there, and you can see where the resistance is now at the 8-week moving average, right? Well below the 30-week moving average now. It's fallen below the 200-week. So I mean, it's extremely oversold. We've had a correction. We had a failed correction bounce. So this is the bear market for bonds, and now, you know, really extreme. It got down to the old fall 2008 low point there. So obviously there's going to be some support, especially in the bottom of this value area for the past 5 years, and lots of volume over the past week. And like I said, we talked about this idea of the intermediate line getting below the 10th percentile. Here we go. Get the intermediate line below the 10th percentile, which it had been going into this week, and it's made a little bit of a jump higher here. Looking at the weekly chart, you can see the near-term line was below the 10th percentile with lots of clusters. And then when you look at the monthly chart, with the month that ended with that last week in April, so this would be the monthly for this one that's still about halfway done. But the April month, you can see the momentum line on the monthly chart got well below, and we got a cluster on the monthly chart. So, again, you just don't get clusters very often on monthly charts to begin with, much less on bonds. And you can see, the last one we got was October 2018. So, and then that led to a really good move to the upside. So, and you can see we had such a big range last month, about 14 points there, such a huge range. And then now, was it 14? And now we're at, half of that with a cluster here forming. So, and then 20%, you can see the PPO between price and the moving average way lower than it was over there when, again, we sparked this really good run off of that monthly cluster, and the momentum line getting below the 10th percentile there. So bonds are set up for a really strong bullish move. When you take a look at like gold, you can see crossing below the 200-day moving average. That's how strong the dollar has been. Let's give this some perspective here. You can see we did finish the week below the 50 moving average. So let's see if we hold that. A very important week for gold to see if we end up holding this breakdown, because this would be correction levels, right? You'd start to move towards the 200 week in that case. And of course, that's going to require, a strong dollar move, and the dollar's just continuing just to go so parabolic. Again, when you go out the last 20 years, we're in the 70th percentile, but only again because of these strong moves we had on the dollar there, and then the strong move we had on the dollar a couple times here and there too. And you can see after peaking, what happens to those. So very, very strong volumes the last few weeks, very parabolic moves. When you look at the directional movement index for the dollar index, very parabolic moves, clusters on the daily chart. When you look at, the weekly directional movement index, again, the ADX on the weekly charts up above 40, a huge parabolic move here. What's interesting is the yen. So when you look at the dollar yen, which is, remember, that's between the euro and the yen, those two currencies make up 70% of the dollar index. Obviously, the euro is way more than the yen. The euro is like 50 some odd percent, so the yen would be like 13. But still, when you look at the yen here, the pattern that it got here, let's go to this chart. When you look at this break below the 17-week moving average, and we try to get back above the 8 and didn't hold so far. So, you're getting a bearish divergence now forming here that we just haven't had during this parabolic. This is the first time since the parabolic run that we've been on this side of the 17-day. Now, we didn't close there the week there, but we, pretty significant break on Wednesday, and you can see that, the MACD's been below its moving average for so long. Once you get below that, you start to really, the pace of the decline starts to go down rapidly. So that's going to impact the dollar index. Again, that's so parabolic, partly because the yen went so parabolic. When you look at the euro, they had such a significant bearish move at the end of the week. And we'll see, how much further that takes. See, this has not gotten above the 17-day moving average yet, even though the MACD is kind of flirting around with its moving average there. Let's take a look at how the sectors performed this week. So let's move over to the comparison chart and take a look at the sector performance. And we'll just look for this week, just the week that was here. You can see everything was pretty bearish going into Friday. Really going into the close on Thursday, we had a little bit of a jump. But it was mainly technology, communication, or consumer discretionary. They still finished the week down with financials and real estate, which is interesting to see those two on that side of the spectrum. Usually real estate's up here, but by the end of the week, your best performers are the safety trades. Staples ended up positive on the week. Utilities were positive early in the week, and they are utilities ended up being one of the outperformers along with healthcare, and then you see communication services. When you look at the rotation chart to see how these sectors are performing right now, which ones are moving which direction. So from a weekly perspective, you can see the the sectors with the biggest momentums still are, even though they're declining, is utilities and healthcare and real estate. Real estate, you have industrials there, staples. Let's see, materials, and you have materials, healthcare, and utilities with your biggest momentum levels. You can see the worst momentum are discretionary, technology, financials. Your biggest relative strength are energy, utilities, and staples. So those three have been your biggest outperformers for a long time. When you look at the daily version, again, we've only had like one update here, but when you look at the daily version of this chart, eventually, there we go. So you can see right now, energy still has the best momentum. Communication services has some strong momentum here, and then technology has, even though it's declining, still has the highest level of momentum. You have all consumers, staples and discretionary down, along with real estate. Your biggest outperformers still are energy, staples, materials, and utilities still kind of in that area too. So, but the main trends still are very, very safety oriented here, as the markets are still focused on. You can see the big three over here on the lowest relative strength: the communication services, discretionary, technology. They're really not, still not really going anywhere. You can see if I were to fit this around, and if I were to do, you can see technology, for an example, was so bullish as we were heading up, but once we started to roll over, it's down to the left, and they haven't changed anything. And same thing with discretionary. We're bullish while we were rallying, but then once we started to roll over, it rolled over and is in the left-hand side. And communication services actually moved over first during the rally and has been over there this whole time as we've kind of rolled over here. It's kind of stuck in this area here. Look at utilities, and utilities was bearish for a long, long time, and then it took off into the green during this decline. Staples the same way, right? Staples here took off into the green during the decline, and it remains in the green right now as we speak. All right, before I traded the other day, I want to take a look at Electronic Arts, EA Sports, since they do a lot more than just sports. But Electronic Arts here, you can see the intermediate line's rising. I got above the market sentiment line, came off of a cluster around earnings, got above its 40th percentile. Still not in bull. I mean, we're at 2% above the moving average, but not. That's not a significant number. You can see relative, like we got to 2% above it over there. 2.5% above it. We didn't turn it around. Very similarly, we're at a lot of different resistance levels. Obviously, the near-term line's not into bullish territory. It was over there, and it's even lower now. It's great rally the last 3 days, and still did not. I mean, that's how bearish it was. Still did not get that near-term line into the upper reversal zone. When you look at where we are here, you can see a big volume. Like we got above the 50-day moving average, got above both the 30 and the 50. So significant move there, but right to a resistance, right to a volume resistance, still below the value area. So still, like, again, you can see we're above the 50, just like we were over there. We made a big break. But you wonder how much, we're going to get a move very similar to what we saw back over there. When you take a look at some of the other oscillators, we're not into bullish levels here. We're kind of in no man's land, very similar again to that same peak. A lower CCI than what we had over there, so not necessarily the most bullish patterns there. We are still below the Ichimoku cloud. We got up to it, and we broke what bearish move we did have going, trend we did have going, but we didn't get into the cloud there. From a Bollinger Band perspective, those bands were so wide, you're up at the top end of the middle half, right? You're not into that upper quartile yet. And again, you can see the big volume node in the value area there, still holding as a resistance level to the downside. I wanted to show, let's see, the weekly, this chart here. It's kind of big, a big upper shadow, lower shadow, huge lower shadow there. The PPO is really, really low and rising, but still negative differential. So we still don't have that positive differential, even with the green arrow. we don't have that positive differential yet. And when you look at, its whole moving average here, there we go. Obviously, we have turned it around. You do have the parabolic stars right at the bottom. The problem is look how big that daily candle is, and how far above this histogram, how far it got up. If you look at, again, off to the side, that's about as far as we got. And, we had kind of a brief move over there too. Very strong rally, very strong momentum to get up to resistance. The question is whether or not we're able to get through that resistance. And so the nice thing about that is you can really set up a decent trade, because if we bounce off this resistance, you've got a good move to the downside. We know where the bears are. But if it breaks the resistance and actually turns bullish, we'll know really quickly because we're right there. So we can keep our risk really low and get a pretty decent reward for our risk to the downside, even if we keep it safe. So in this particular case, buying the at the money option and then selling one strike away out of the money sets us up for this particular trade here. Again, going for about 2/3 of a normal risk and a pretty decent reward for that risk. But again, we don't have to go for the full. We don't have to leave it. In fact, we rarely do go maximum loss on these, and we can get out a lot earlier if it actually does break the resistance. So if we can get out with a couple $100 of risk, then that gives us about a 4-to-1 risk reward ratio. So really small risk, pretty decent reward for that risk on a trade that doesn't have to go very far for me to get that reward either. We just have to get below 120. And if I look at it on this intraday chart here, you can see 120 would be getting back below yesterday's low point, kind of a double top off of the earnings, and then back down below that low point, and you're set, right? You've got your maximum gain on that particular trade. And you can see there's not very much volume down there. So because we moved up so far so fast and down so far so fast, even going up farther and faster, there's just no volume there. So it opens up the possibility, and that's where the point of control is, which acts as a magnet to it, so we can really move towards that magnet pretty quickly. All right, well, that does it for today. You've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes you to our Market Outlook forum. Open up any new threads with any questions or comments you have. Reply to anybody else's thread. And let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel. Hit that thumbs up icon. Comment on the video down below. You can also subscribe to our website at marketscholars.com. Like us on Twitter and Facebook as well. Have a great rest of your weekend, everybody, and we'll see you all on Monday.